Good morning, everyone. I hope you all have a great start to the week. Well, we certainly opened the week with some important market movers, which is a major market mover. The war between Israel and Iran saw the United States unite, and then we witnessed the attack on the Iranian nuclear power plant over the weekend. And so this has certainly opened the scene, a new scenario that is quite delicate, which raises some big questions about how the markets will be able to, let's say, digest this new situation. Also, because no later than this morning, an hour ago, important members of the Iranian military command said that, okay, Trump may have started the war, but the one who will put an end to the war will be Iran. So in the face of such a strong statement, let's say, where you can really sense let's say you can sense, let's say, obviously the Iranian disappointment in response to the attack suffered from the United States. It's very strange to see markets that opened last night with a gap down. Of course, the Nasdaq around 15,570 and the SP at 5,960, but that throughout the entire European overnight session and even all morning showed remarkable strength and an absolutely bullish trend. Let's say that the markets were even in multi-distribution mode, and practically speaking, except for a brief moment of pause, about 4 hours after the open, they still showed a consistently upward trend, never giving any indication of wanting to move downward. Obviously, we have to be very, very careful because a breaking news event such as an Iranian terrorist attack could cause the market to drop by 2 or 3%. So we need to be extremely cautious right now. My advice, of course, which obviously is not investment advice, but what I will be doing myself is operating with very, very short-term trades, because as I'm telling you, and with very strict, clearly defined stop losses, since it really only takes a single piece of news to make the market suddenly plunge. So the market is moving in a rather unusual way compared to the current geopolitical situation. So be careful, very careful. A lot of caution is needed right now. From a macroeconomic perspective, however, some German and British data have come out that seem to indicate or are indicating that the European economy is slightly strengthening. It's a very slight improvement, but these are reassuring figures from an economic standpoint. Well, with that said, let's move on to our chart analysis and take a look at the volumetric analysis of the markets. Let's see what the current situation looks like. Well, as we can see, the weekly volume profile chart of the SP is showing us that last week we made lower highs and lower lows. So the price action, even the relative lows of this week are already lower compared to last week, okay? So let's say that the price action seems, let's say, reversed even if only slightly, but it's somewhat reversed. So a market that, as we can see, also found support again at last night's opening, okay? Found support once more in the 5,960 area, okay, of the SP. So it's a market that has once again found support in this area, and therefore for now doesn't seem to want to give way to the 5,970 level. Pay close attention, because obviously if we were to lose this area, a move down to the 5,910 area would be quite likely, okay? On the other hand, we can see now that in the European session, the 635 to 640 area has for the moment acted as a point of resistance, a reason for the market to pause. So for now, the market continues to move within the range, let's say, of the last few days of last week. You can see how last week we still left a spike, a shadow outside the 640 level, and in the end, the market moved, speaking of opening and closing, between the 5,970 area and the 635 area. So the market continues to indicate that this is its range, its current trading range, okay? So this is the first thing to check. Obviously, if the market were to leave the 635 area and break it to the upside, then the market will probably start trading and move first towards 650 and then, of course, 680. So pay close attention to the 640 level, which is currently the intraday high, because from there we'll see exactly how the market will handle it. So as far as the SP is concerned, we've understood that the main issue right now is essentially a reversal in price action. And let's say the market is currently moving within a trading range between 5,970 and 635 at the moment, of course. Let's always remember the gap we have down here that still needs to be closed. And let's also keep in mind that even in the upper part, let's say, even in the upper part of the market of the price, here it is, we still have another gap to close around the 695 area, okay? Here they are. You see, this is still the open gap on the other side. Today we're also opening with a gap down. You can see that last week's close was still around the 5,980 area, 1,980 more or less. So in short, here's a market that once again today presents us with a rather, let's say, lively situation that we need to keep an eye on. The situation is the same for the Nasdaq because it's moving more or less in sync with the SP. So we have lower highs and lower lows, okay? And as you can see, the Nasdaq is, let's say, stuck between 22,000, between 21,080 or so, and the lower end, which is around 21,579, where he found support today, and let's say where it opened this morning with the gap down. Here, let me open it up so we can see better. There you go. You can see this was the support area, let's say MH, an important one. So the area around 21,580, 21,600. And this is definitely a very important resistance area. So 21,980, 22,000. So even the Nasdaq, although with a slightly wider range, is moving within a trading range that is precisely between 21,980 and 21,570. So the test in this area will be very important. Let's see if it will carry out this test at the opening today. Therefore, the test in this area between 21,980 and 22,050 will be very important, and we need to understand whether the market here will have the strength to break through and move upward, or if it will be rejected here and fall back again to 21,570. So the situation is quite similar for the Nasdaq as well. As for the situation with our range chart and the vol analyzer levels, we have already seen how 21,950, where we had a vol analyzer level coming from Friday, has so far rejected the price. You can see exactly as we mentioned earlier. And this morning, look, the price opened exactly on a vol analyzer line that came from the past, and the market reacted to it twice there. It held, and let's say from there, it started moving again. You can see that the dynamic VWAP has practically always acted as support and continues to do so. Now, we're also quite far from it, which indicates the strength of the current trend. You can clearly see that the market hasn't fully accepted this area because we're in a fairly significant low volume zone. It made a sort of acceptance between the 21,750 area, then stretched out again, created another distribution, and yet another distribution. So we can say that today is definitely a multi-distributive day with a market that is absolutely trending upwards. So we confirm exactly what was said earlier. At the moment, the market is in an uptrend. We have, let's say, the first line of resistance, the first level of resistance at 21,950, and then at 21,994, 22,000. Basically, the 22,000 area will be the next resistance zone where we'll see if the market has the strength to break through or not. At the moment, the market is still bullish, so we'll see what happens when the market opens, when the cash session opens, what it will indicate for the day and probably also for the coming week. In the meantime, I wish everyone good trading, and see you soon. Best regards. Bye.